This analysis comes from Glide Logic Corporation. It is not investment advice. The full document is SurgePays Inc.'s NASDAQ ticker SURG filed Form 8K, filed on May 16, 2025 at 5:31 p.m. Eastern Time. Let's dive in. SurgePays, a NASDAQ-listed company focused on wireless and fintech services for underserved communities, has secured a $6.999 million senior secured convertible note from Funicular Funds, an institutional investor that has backed the company before. The note carries a steep 15% annual interest rate, paid monthly at 1.25%, and comes with 700,000 five-year warrants exercisable at $6 per share, roughly double SurgePays' recent trading price. After fees, the company received about $5.925 million in immediate cash, shoring up liquidity for its nationwide expansion plans. Looking at the balance sheet, SurgePays reported $23.98 million in total assets against $8.71 million in liabilities as of 31 December 2024. The company recorded a net loss of $45.73 million for 2024, largely tied to winding down the Affordable Connectivity Program. Despite that setback, management now forecasts more than $200 million in revenue over the next 12 months as it rolls out its MVNO and wholesale MVNE platform. The convertible note matures on May 12, 2027, and begins amortizing at $500,000 per month starting January 31, 2026. Its initial conversion price is fixed at $4 per share but includes down-round protection that can reset the price if SurgePays issues equity below that level. As part of the deal, the investor also sold 333,333 shares back to the company at $3 each, trimming the public float while embedding future dilution potential. Protective terms are layered in: a 4.99% beneficial ownership cap, optionally expandable to 19.99%, helps limit near-term overhang, and SurgePays can prepay the note with just a 2% premium after a 5-day notice. Collateral is a first-priority lien on virtually all corporate assets, backed by guarantees from every operating subsidiary. Operational execution now becomes critical. SurgePays runs two main segments: a mobile virtual network operator unit and a point-of-sale platform serving neighborhood convenience stores. Both lines will need to generate enough cash to cover the note's steep 15% coupon and the $500,000 monthly principal payments kicking in next year. The risks are clear. High interest plus redemption premiums could stretch cash flows if subscriber growth stalls. Down-round adjustments and 700,000 warrants pose dilution uncertainty. Tight covenants limit new debt, dividends, and asset sales. Any breach could force an accelerated redemption at a penalty. Finally, collateral coverage is only as strong as SurgePays' modest tangible asset base. Key milestones to watch include registration statement filing within 90 to 120 days of the investor's written notice, the first $500,000 amortization payment due 31 January 2026, NASDAQ trading volumes that gate monthly share conversions, any equity raise below $4 that could reprice the conversion rate, progress toward the $200 million revenue target, and positive cash flow by year-end 2025. This financing marks a pivotal point for SurgePays. It injects urgently needed growth capital, but at a significant cost in interest, covenants, and potential dilution. Whether the company can scale its wireless subscriber base fast enough to service a $500,000 monthly paydown will likely determine its valuation path over the next 2 years. Disclaimer: this content is AI-generated and may contain inaccuracies. It does not constitute investment, legal, tax, or accounting advice, nor an offer to buy, sell, or hold any security. Any forward-looking statements are subject to risks under the Private Securities Litigation Reform Act of 1995. Always review the issuer's complete SEC filings and consult qualified professionals before acting on this information.